During our stock analysis, we're going to explore the key pillars, examine the ownership, look back at past results, we'll find out what the analyst predictions are, as well as giving the business a valuation, and examine the potential return on our investment, and finally we will summarise our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests that these are the key metrics when first evaluating a business. The first pillar we are going to explore is the earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. Earnings per share growth is up by 4%. Now let's look at the free cash flow, which is the money a business can generate from its operations. Free cash flow growth is down by -2%. Then we come to the next pillar, which is revenue, and this tells us how good the company is at generating income before deducting expenses. Revenue growth is up by 3%. Book value is calculated by subtracting the total liabilities from the total assets, and this indicates the equity growth for the company. And book value growth is up by 5%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and the return on equity. These two measures allow us to assess a company's efficiency at allocating capital under its control. And return on invested capital and return on equity are very healthy at 19% and 20%. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. And Monster can use their free cash flow to pay off their debt within 3 months. In this next section, we will now focus on other key metrics which will help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. And Monster's gross margin is 50%. Next we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. And their operating profit margin is very healthy at 27%. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for a company that has a free cash flow yield of 5% or higher. And they have a good free cash flow yield of 2.81%. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. And this is 13%. Ben Miller believes earnings growth is the biggest indicator to a company's stock price, and this is looking very good at 10%. I've included a link if you want to check out the investors page and see the annual report. This is Bitesize Investments, giving you a step-by-step approach to your investment journey. There are currently 2 super investors who own this company. If we look back at Paul Tudor Jones II's previous sales and purchases, we can see that he's both bought and sold shares in Monster in the last few years, and has increased his stake in Q1 of 2024. He has 9.27 million invested in Monster, and this makes up 0.12% of his overall portfolio. However, 4 other super investors have sold shares. Ray Dalio has previously bought Monster shares, but over the last year he has been selling. He has 50.2 million invested in Monster, and this makes up 0.26% of his overall portfolio. Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that from 2014, Monster have more or less been steadily growing year on year, and interestingly they seem to have a pattern of increasing by about $10, and then the following year trade a little sideways and then have another jump. On average, the analysts believe that the price target should be about $46, but some believe it can go as high as $68. Analyst reports suggest that Monster is a little undervalued at the moment, and the overall consensus is that Monster is a buy. Collectively, the analysts believe that the company will grow between 11 and 18% over the next few years. So I will use the current earnings per share of 1.6 as my starting point when creating a valuation. Based on a combination of past growth and future analyst predictions, I'm going to estimate the earnings per share growth to be 13%. I'm going to give Monster a PE of 25, and after that I project these numbers forward by 10 years. We will then need to include a 15% return, and this gives me an estimated future stock price of $136 per share for its future share price. And then we work out the current value that Phil Town calls the sticker price, which is about $34. Then we apply a margin of safety, and at 25% it gives me a buy price of $25. And to be honest, it would take a significant event to get it anywhere near this price again, and realistically the lowest it would fall would be the 2022 price of about $36, which is in the region of our sticker price. If you found this video useful, click on the link to check out my last stock analysis. The return we would receive if we bought at our sticker price of $34 and sold in 10 years' time at our estimated future stock price of $136 would be 300%, but this is dependent on our assumptions for the company being correct. In addition, currently Monster don't provide a dividend. According to Morningstar, Monster Beverage is believed to have a narrow economic moat. The bull case for Monster Beverage is that they are a market leader only second to Red Bull. The company has demonstrated consistent financial growth and healthy profitability. Their continuous innovation and new product lines has opened up additional revenue streams, and their strategic alliance with Coca-Cola has significantly enhanced their distribution and market reach. Additionally, Monster have recently put in an offer to buy back $3 billion of its outstanding shares. The bear case for Monster highlights ongoing health concerns about the effects of energy drinks, particularly related to high caffeine and sugar content. Monster also faced challenges in procuring sufficient quantities of aluminium cans to meet the demand. Monster's co-CEO sold a chunk of their company's stock at $24 million worth of shares, but had wanted to sell double that. If you've enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now we'll summarise what we found out about the company. When reviewing the key pillars, Monster scores 7.5 out of 12, and under ownership, 2 super investors have bought in the last few quarters and 4 have sold shares. Their average share price is in an upward trend but is down 12% year to date. Analysts are indicating that Monster is a buy, and they are predicting they will grow between 11% and 18%. Using the earnings per share growth model, my personal buy price will be $34 or less, and if you click on the link above, you can find out about my personal portfolio. According to Morningstar, they have a narrow moat and exist within a highly competitive industry. My final overall rating is 4 stars out of 6, and I have given this a category A rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comment section to help me develop the content I am creating. And don't forget to like and subscribe.